you're a Muslim content creator in the UK, making money from YouTube, TikTok, brand deals, or maybe selling a digital product you built at 2 AM one night, this video is for you. One of the most common questions I get is, do I have to pay tax on this? The short answer, yes. If you're earning more than £1,000 a year, HMRC wants to know, and they expect you to be on top of it. But here's the thing, most creators have no idea what to do next, and that's okay, because I'm going to walk you through everything, step by step. There's this idea floating around. If I'm not earning much, I probably don't need to worry about tax, right? It sounds reasonable, and to be fair, in the UK, there's something called the Trading Allowance. It lets you earn up to £1,000 a year, from content, freelancing, anything on the side, totally tax-free. No registration, no tax return, no drama. But the moment you go over that £1,000, even by little, you move into a different category. You now need to register for something called self-assessment. And that's where most creators trip up. Not because they're trying to dodge anything, but because no one ever told them. Let me give you a quick breakdown. The UK tax year runs from the 6th of April to the 5th of April. If you cross that £1,000 threshold in that window, you need to register with HMRC by the 5th of October and file your tax return and pay anything owed by the 31st of January the following year. So let's say you earn over £1,000 between the 6th of April 2024 and the 5th of April 2025. You'd need to register with HMRC by the 5th of October 2025. Then, by the 31st of January 2026, you'll need to file your return and pay any tax you owe. It's simple once you see it laid out, but no one tells you this stuff up front. So, even if you've only done a few paid brand deals, even if it's just a side hustle, you're now considered self-employed for tax purposes. And that's not a bad thing. It just means it's time to get a little more organized. This is where things get tricky, not because it's complex, but because creators often don't realize what HMRC actually sees as income. It's not just the cash that hits your account. If you're earning from your platform, even just a little, it counts. Here's the kind of income HMRC looks at: ad revenue from YouTube, brand deals and sponsorships, affiliate commissions, selling digital products like courses, templates or ebooks, paid services such as coaching, consulting, editing. If you're getting paid for anything linked to your content, it's taxable. And here's the trap. People often assume, I'll worry about tax when the money starts piling up. But that's not how it works. It's not about how much you make. It's about the moment you start making. That's why you need to track it from day one. Because whether it's £50 or £5,000, that money comes with a responsibility. And how you deal with that responsibility, that's what separates stress from clarity. So now you know what counts as income. Let's talk about the next big question. How much tax am I actually going to pay? If you're just starting out, you're most likely operating as a sole trader. And in that case, you'll usually pay two types of tax: income tax and national insurance. Let's start with income tax. This is based on your profits. That's what you earn after expenses. You've got a personal allowance. The first chunk of your income is tax-free. Then after that, the rates go up in bands: 20%, 40%, and 45% for the higher earners. You'll see the breakdown on the screen now. Most creators sit in that 20% band, but if you've got a second job or extra income, it could push you into a high rate. So it's worth keeping track of your total income. Then there's national insurance. This one gets missed a lot, but it's still part of your tax bill. If you're self-employed, you'll pay Class 2 and Class 4 national insurance. One is a small weekly amount, the other is a percentage of your profit. You'll see both of those rates and thresholds on screen now. It might sound a lot, but here's the truth. If you set aside around 25% of your profit, you'll usually have enough to cover both. Now, if you're running things through a limited company, that works completely differently. And don't worry, I'll cover that in a separate video. If all this talk about tax has your mind spinning, you're not alone. This stuff wasn't built to be easy. But here's the good news. Getting the basics right goes a long way. Here's what I tell every creator who's just starting to earn. Track what you earn. Whether it's ad revenue, affiliate links, or coaching sessions, Keep a record. Every bit of income matters. Use a separate account. Doesn't have to be a fancy business account. Just separate your content income from your day-to-day stuff. Put money aside. 20 to 25% of what you earn. Just park it. It becomes your safety net when tax season rolls around. And don't wait until January. Get help early. Even just a conversation can save you hours of stress later. The fact that you're here, watching this, paying attention, taking it seriously, that already puts you ahead of 90% of creators. If this is resonating with you, hit the like button so I know to make more creator-friendly videos just like this. And stick around, the next part ties all of it together. If you've made it this far, thank you. You're doing more than most, and I mean it. Now, you've got a choice. You can either go it alone, start tracking your income, keep things separate, plan ahead, and stay on top of it. Or you can get help. If you want someone to walk you through this, help you set things up the right way, and take the stress off your plate, that's what I do. This is what I love. There's a link below to book a free call. No pressure, just a real conversation. We'll figure out what's working, what's not, and map out your next steps together. Until then, keep showing up, keep creating, and don't forget, you're not just building content, you're building a business.